And we look at the mix of excitement and continuing worries now with João Vale de Almeida, the European Union ambassador to the United States, and Ishwar Prasad, Cornell University economist and a fellow at the Brookings Institution. He previously worked at the IMF. Welcome to both of you. Mr. Ambassador, in some ways we have been here before with grand announcements, the market goes up, and then a few days later, disappointment. Why is this different?
I think this is different. We have for the first time a comprehensive plan, one that goes very far in addressing short-term issues as much as longer-term issues. I think we are dealing effectively with the Greek problem, avoiding a contagion effect to other countries. We are involving the private sector, the banking sector. They have responsibilities in finding solutions, and they are contributing to this solution. And we are, creating more firepower for our crisis mechanisms, being able to deal with the present situations, but also with potentially future situations.
There has been a sense, and even a fear around the world, that Europe was some in Europe were in a state of denial, not facing up to the scope of the problem, not dealing with some of the comprehensive measures were needed. Do you sense a shift in that regard?
Absolutely. I think there's a sense of momentum, a sense of urgency. You have to understand that when people sort of criticize the European Union for being slow and complex, we are not a country. We are 27 countries. In the euro area, 17 countries, very diverse, that require, discussion so that we get to consensus. It's complex. Sometimes the markets would like us to move faster. Maybe sometimes the Americans would like us to move faster.
That's happened a few times.
It has. I think the important point here today, and this is a good day for Europe, as I think it is a good day for the US and for the world economy, is that our leaders came to a set of measures and initiatives that will be far-reaching.
Ishwar Prasad, take us into some of the details. Now, we said many of the details are not well known. The question of the rescue fund, for example, what jumps out at you? What do you like, and what do you still wonder about?
First of all, I think this is a very promising step in the sense that Europe is facing up to some harsh realities in a concerted way. And the all sound very good because it is, in a sense, a very comprehensive measure dealing with the banks, dealing with Greece, dealing with long-term governance problems. But the details are really the problem. So if one thinks about bank recapitalization, there was a sense that banks may need somewhere between 100 billion euros and 300 billion euros. Why? Because a lot of the capital that they hold is in the form of debt of these economies that are in trouble. So once those are marked down to market value, the banks need more capital. There is a sense that 100 billion euros may have been very much at the low end of the amount that banks need. Then there is what is called the European Financial Stability Facility, which is supposed to be
the rescue fund.
Now, the critical thing to note is that there is no money added to the rescue fund. But what has been decided is that the EFSF money can be used in a way to leverage up whatever money it has. And the hope is that the EFSF money could be used to basically guarantee the first round of losses that private investors may take if they were to buy new debt. So if an investor, say an official government or a private investor were to buy new Italian debt, and then there was a default on that debt, then a certain proportion of that, maybe 20-25%, would be covered by the EFSF. Now, is this going to be enough to draw investors in, either private or sovereign? That's the big question.
Well, let me ask the Ambassador, because what is notable here is the governments are not committing, as Ishwar said, to put more money in. So in reality, can a bailout fund be there and be enough if something happens?
I think it can. And the reaction of the markets, and I've been talking to some investors throughout the day and people representing the market forces, they seem to consider this as a very promising and a very important package. But let me say something. In times of difficulty, and we all are in difficult times financially, economic, even socially, one needs to be creative. And I think what this set of measures reveal is also a search for creative mechanisms to maximize the firepower that we have at our disposal today. And that's what we've done around the facility, the European facility. We are leveraging by 4 or 5 times with the money that we have put there before. So we need to be creative. We need to involve the private sector. And many people in the United States talk about the role of banks. I think our leaders were seeking a valid, legitimate and balanced contribution of the banking sector to this particular problem. And the proposals on the table aim at that.
Speaking of banks, another part of this, as we said, is the so-called haircut regarding Greece. Now, is that how will that work? I mean, it's called a voluntary haircut. What does that mean, and will it work?
Now, there are two aspects to whether it will work. The first question is whether this is going to work for Greece. Now, the presumption is that, in fact, if private bondholders are given only 50 cents on the dollar, and of course, his bonds are already trading at values less than full value. The question is whether that's going to be enough to get Greece out of this mess, and even if Greece delivers a lot of privatization revenues, about $100 billion, even if Greece implements its fiscal restructuring, Greece will still be left with about 120% of GDP debt in 2020.
Which is still quite a lot.
Is this going to be sustainable? Probably not.
So the question is whether this just postpones the problem.
Yes, and for banks there is another problem, which is that they are being asked to raise capital at a time when it's very difficult to raise capital. Plus, there is the notion that there might be more write-downs coming down the road, not just on Greek debt, but perhaps on the debt of other European countries. So banks, naturally enough, may be in a mode of conserving cash. And conserving cash means lending less to households, to corporations, which could affect European economic growth.
What about the political question here that lurks always, is the sense that European voters are not interested in these bailouts anymore, that they don't want to help other countries, that they're tired at this point of being asked to put out more money. This agreement doesn't really address that, does it?
I think what voters want in Europe is growth and jobs, stability and security for their families. That's what we're looking for, and I think this is the debate in the US as well. So we were faced with the situation of emergency in Europe. You know, difficulties in some countries affecting the whole system, risking bringing down the whole euro area to a very difficult situation.
You think it really it's close to that, or it came close to that?
I think we should not be complacent about the crisis. We were in a difficult situation. So when you are in a difficult situation, you have to think of the alternatives. What are the alternatives? The alternatives to the kind of measures we are taking now were much more costly for everybody, including those who are already in difficult situations. So I don't think that the leaders will go this way if they didn't know that they could eventually count on the support of the electorate. And, you know, we're not talking much about that, but together with those measures that we have been describing here, there were a number of initiatives aiming at enhancing growth in Europe. We have to keep on reforming our economies. We have to keep on reforming our labor market, public finances, pensions systems, and all of this is part of the package, right? When we support Greece or Portugal or Ireland, we are putting on the table very strict conditions. We hope other countries that are not being supported to do the same, and this is all part of the growth-enhancing measures that we're taking at the same time as we decide what we are describing.
All right, Ambassador João Vale de Almeida and Ishwar Prasad. Thank you both.